Hello friends, I'm Madhwesh Aniruddha from Advait Learning. I'm a chartered accountant based in Bangalore. Hope you're all staying safe. So today I'm here to discuss the basic concepts of accounting. Why do we have to learn accounting in the first place? Not only from an exam point of view, a good grip of the basic concepts of accounting will come in handy even after we start working in the future. So let us discuss all the concepts with examples so that we get a good grip of all the basic concepts of accounting, right? Let us start. What is accounting? Accounting is a process of recording the financial transactions relating to a business. I repeat, it is a process of recording financial transactions. Why is financial transactions important? We have to know the difference between an event and a transaction. An event is something which might have an impact on the business, but though not measurable. To take an example, the managing director of A Limited resigns. How do I record it in my books of account? It cannot be recorded because it is not entailing an outflow of a monetary resource, right? All financial transactions will result in an immediate or a future outflow of a valuable resource, outflow or inflow. In the same example, what if the MD demands a compensation of 10 lakh rupees before leaving the organization? And then it becomes a financial transaction because I have to record the compensation paid to him as an expense in my book, and it is measurable. The first one, a mere resignation, was an event, and the MD demanding 10 lakh rupees as compensation became a financial transaction. Hope you've got an idea of what a financial transaction is, right? We move on to the next point. What is the sequence of accounting? I mean, what do we do first? Do we record? Do we classify? Do we summarize? What do we do first? We record first. When I say record, it means we pass a journal entry. Why the recording phase is important? Because if anything goes wrong at this phase, the final result, which is the trial balance, balance sheet, and profit and loss account, will not give a true and correct picture of the books of account. We will have to be extremely careful when we record the transactions. And also, looking at it from a practical perspective, recording is of utmost significance because all the accounting packages take care of the classification and the summaries. What we do as accountants after we pass out is record by way of journal entries, and hence we all should be masters of journal entries. And I can assure you that by the end of this session, all of us will be able to pass any journal entry for any transaction, right? Well, the next point, what is an accounting standard? An accounting standard is a set of principles or rules which is laid down for treating various financial transactions. Let us say I'm valuing my inventory. I'll have to go by the principles which is laid down in accounting standard 2. If I'm talking about investments, accounting of investments in my books, I'll have to go by the principles laid down in accounting standard 13. If I'm accounting for government grants, I'll have to abide by the principles laid down in accounting standard 12. However, there are a few areas which have not been addressed by the accounting standards, which is where we come to the next point. What is an accounting convention? An accounting convention is a common practice which has been widely followed and accepted. For example, why do I have to write debit on the left side and credit on the right side? It is not coming out from any accounting standard, or there is no guideline to it. It is only an accounting convention. People have been following it and it is universally accepted, right? And here we come to the important accounting assumptions. As the name itself says, it is assumed that every business follows the three basic assumptions: a going concern assumption, the accrual concept, and consistency. What is going concern? According to going concern concept, the books are prepared in such a way that it is not expected that the business would be wound up in the near future. In other words, there is no idea to close down, to shut down the business. This is what going concern says. Going concern, I mean, it is assumed that the concern will go in, it will go on for a long, it will go on for a long period of time. Accrual concept says that all expenses and incomes, irrespective of whether cash has been paid or received, have to be recorded in the respective year to which it belongs to. I repeat, let us take an example so that we understand it better. I make a sale on 30th March 2020 and I give my customer a credit of 10 days. He pays me on 10th April. When should I record the transaction as a sale? Is it on 30th March or is it on 10th April when the actual cash is received? According to the accrual concept, I'll have to account it as income on 30th March, and it should form part of my financial statements for the year 1920. That is what accrual concept says. Same in the case of expense also. Let us say I have purchased something on 25th April, 25th March, and I haven't paid it till 31st of March, and I only paid on 1st of April. Okay, say after the year end. When do I have to account it? Should I have to account the expense on 25th of March or after the year end? I will have to account it on 25th of March if I'm following accrual method of accounting. This is what accrual concept says. The next concept is consistency. What is consistency? What consistency are we talking about here? Here, we are talking about the consistency in following accounting policies year on year. Again, let's go back to Accounting Standard 2. Accounting Standard 2, which talks about valuation of inventories, gives us two methods in which we can value our inventory. One is FIFO, first in, first out method, and other one is a weighted average method. In financial year 1920, if I have followed first in, first out method, I will have to follow the same method for 2021 as well. It doesn't mean that I cannot change my accounting policy at all once I've started to do it under one method. I can change it only if I'm able to justify it. Only if there is a statutory mandate that I have to shift from one method to another method, or shifting from FIFO to weighted average will give a better picture of the financial statements. Only if I'm able to justify the change, I can go ahead and do it. Otherwise, what is assumed is that I have been following the accounting policies consistently from year to year. As the name itself says, these are assumptions which are made by the readers of financial statements. If I'm not following any of the assumption, let's say I'm not following accrual concept and I'm accounting my books based on the cash concept. What is cash concept? It is an actual opposite of accrual concept. Whenever I receive or I pay cash, I record it in my books. Even if I have sold it on 1st February 2020 and have not received up to 31st March 2020, I don't record it as I don't record it as an income for 1920. I wait until the cash is realized and only then I account it, which is called cash method of accounting. When there is a mandate for my organization to follow going concern, accrual, and consistency concepts, and I am not following any of the concepts or all of the concepts, I'll have to expressly mention that in the notes of accounts or any relevant place so that the readers of the financial statements know that the accounting assumptions are not being followed. Why should I report it? Because if, for example, if I'm not following going concern concept, the accounting treatment of various transactions itself is totally different, right? Hope you're getting it. Next, we have a couple of other concepts to understand. What is prudence or conservatism? It can be used interchangeably. Prudence rule says that provide in your books, when I say provide, charge, debit to your P&L account. Provide in your books for all anticipated expenses and losses, but do not provide for anticipated incomes and gains. This is what prudence rule says. And the word which is interchangeably used is conservatism. So I'll have to arrive at my net income based on based on the conservatism concept. I'll have to be conservative in my approach when I arrive at my net income. I cannot anticipate for incomes. Let us take an example. I might have met a prospective client, but he is yet to give me an order. I cannot go ahead and account that income. Even for expenses, whether I can charge it as expense or I can provide for it as provision is again governed by accounting standard 29. Let us not go beyond this here. So this is what prudence concept says. I'll have to provide for all anticipated expenses and losses, but not for incomes and gains. The next one is cash versus accrual. We have already discussed about it. Next, what is matching concept? Matching concept says that I'll have to record all the expenses which I have incurred in the process of generating my revenue. Let us again take an example. I am a manufacturing concern. I make a sale of, let's say, tires. I sell tires. And to produce tires, I might have incurred various expenses like purchase of goods, factory overhead expenses, wages, salary, rent, and other expenses. I cannot I cannot record only expenses and defer my income and say I need to book losses this year and hence I won't record any income. Or vice versa. You cannot tell that I need to show a huge income so I will defer a part of the expense to next year. No. This is what matching concept is. I'll have to record all expenses which have been incurred in the process in the process of generating my revenue, right? The next one is an interesting thing, capital versus revenue. Let us break this into two, capital expense or capital receipt and capital expense. What is a capital receipt? Capital receipt is something I do not receive regularly. For example, I issue shares, or even a simpler example, I take a bank loan. A bank loan cannot be an income. The use of the bank loan will extend for more than 12 months. The use is, when compared to the revenue receipt, the use of a capital receipt is relatively longer than a year, at least a year, a period of 12 months. Issue of share capital is again a capital receipt. I don't go and issue shares every day. It is once in a while or once in so many years I issue share capital. And all capital items come under the assets or liabilities side, which means all capital items come under the balance sheet and all revenue items come under the profit and loss account. Example for capital receipt we have already taken. What is an example for capital expense? I repeat, I am a manufacturing concern. I manufacture or I produce, I manufacture tires. I purchase a machinery which is used in the process. To me, this machinery is a capital asset because the intention to use this machinery is for more than a year. I will not buy this machinery today and sell it tomorrow or the next week. It is at least intended to use for more than a period of 12 months. And hence, the purchase of machinery is a capital is a capital expense to me, and on which I claim depreciation, and I cannot charge I cannot charge the whole of this expenditure to my profit and loss account. Hope capital receipt and capital expense is clear. Then we come to revenue receipt. A revenue receipt is something that I receive regularly in the day-to-day operations of my business. If I'm a manufacturer of tires, I earn revenue by selling these tires to my I earn revenue by selling these tires to my customers, right? This is a revenue receipt. What is a revenue expense? Similarly, these expenses recur. I have to incur them regularly. Regularly can be on daily basis or a monthly activity. I'll have to pay my salaries monthly. I'll have to pay out my rents monthly. I'll have to pay wages regularly or weekly. And all these form part of revenue expenditure. Hope capital versus revenue is understood. Next, we come to two simple topics which are debit and credit. Whenever we do accounting, we do double entry system of accounting. Under double entry system, for every debit, there is a equal and corresponding credit. For one debit, there can be multiple credits, or for multiple debits, there can be a single credit. But the total of debit and total of credit should be the same. Then we come to the most important topic, which is the golden rules of accounting. Let us first read and then try to understand it in detail. Real account. There are three types of accounts: real account, personal account, and nominal account. The real account rule says debit what comes in and credit what goes out. And personal account says debit the receiver, credit the giver. And nominal account, debit all expenses and losses, credit all incomes and gains. Having said that, let us move to the next slide, wherein we can understand the golden rules of accounting in the best possible way. This is the way in which my gurus have taught me, and I think there is no other method which is more simpler than this. This is the detailed explanation, and we have a shortcut also to understand this. First, let us understand all real accounts. Okay, let us come down. If we can remember these 3 points, we will be able to pass any journal entry for any transaction, right? First one, all real accounts will appear on the asset side of the balance sheet. Please pay attention. All real accounts will appear on the asset side of the balance sheet. When I make the statement, can there be any real account which can appear on the liability side or in the profit and loss account? No. Any real account has to be there on the asset side of the balance sheet. What are all the real accounts in the present in the present balance sheet? These are the 5 real accounts. I've colored it in brown. Building, furniture and fixtures, plant and machinery, investment, cash and bank balance. These are the 5 real accounts which are appearing on the asset side of the balance sheet. That covers the first point. Second one, all that appears on the liabilities side of the balance sheet are personal accounts. Please bear in mind, I never said all personal accounts are liabilities. In the first place, I said all real accounts are assets. In simple, I mean all real accounts will appear on the asset side of the balance sheet. However, all personal accounts are not liabilities. All liabilities are personal accounts. Everything that appears on the liability side of the balance sheet is a personal account. You write anything on the liability side, it is a personal account. Real account or nominal account cannot fall under liability side. So anything that appears on the liability side is a personal account. So can there be any personal account which can come under asset side? Yes. For example, debtors, bills receivable. These two are examples for personal accounts which are coming under the asset side of the balance sheet. I repeat from beginning. Please pay attention. All real accounts fall under asset side of the balance sheet, comma. All liabilities are personal accounts. There can be a few personal accounts which come under asset side of the balance sheet. Why this explanation is understand, you'll get it. It is why this explanation is important. You'll get it later. But please understand. We are done with real account and personal account, and then comes nominal account. Everything that appears in the profit and loss account are nominal accounts. Then let us read the rule again. Real account says debit what comes in, credit what goes out. Let us stop here. When we say real account, all real accounts fall under asset side. Let us take an example. Furniture and fixtures worth 1,50,000 are already in my balance sheet. I mean, they are already in my business. I purchase another machinery. I purchase another furniture worth rupees 1 lakh. What will be the entry for this? When I say this is real account, you'll have to go to real account rule, which says debit what comes in. So the entry will be, there is an increase in the value of furniture. I'll have to debit furniture and fixtures for 1 lakh. What will I credit? Cash. I am paying it by using cash or bank. Okay. And now the balance is 88,500. Let us say I'm purchasing worth 50,000. Okay. So the entry will be furniture and fixtures debit 50,000. And what will I credit? Cash and bank balance is again a real account. In this entire transaction, what is happening? One asset is increasing and another asset is decreasing. What is the asset that is increasing? Furniture and fixtures. I've already debited it. What will I credit? Cash and bank balance, because I'm paying them by cash. So there is an increase of 50,000 in 1,50,000 and there is a decrease of 50,000 from 88,500, and hence my balance sheet total will tally. This will hold good for real account transactions. Then let us look at nominal account first. Nominal account is a straightforward rule. Whatever expense you incur in your business, you debit it. Whatever you gain, you credit it. Let us take an example again. I pay rent for the month of March. What will be the entry? Rent is an expense. How am I paying it? I'm paying it by using my cash. Per month, my rent is 30,000. First, let me see whether it is an expense or an income. What is rent? Rent is an expense. So I debit it. Debit all expenses and losses. I pass a journal entry by debiting rent account, office rent, 30,000. What will I credit? I am paying cash. What account is cash? Cash is a real account. What is real account rule saying? Debit what comes in, credit what goes out. What is going out here? Cash is going out. So you credit. So even, let us not forget, even if I forget what is nominal account rule, I will still be able to get the journal entry right if I'm sure about real account rule. Real account rule is the simplest of all the three. Debit what comes in and credit what goes out. If you have totally forgot what nominal account rule is, just see in the transaction whether there is any real account involved. If there is any cash or bank payment or cash or bank receipt involved. If there is a payment, you go to real account rule, you credit it. So whatever is left, you debit it. So somehow or the other, if you know one rule, you should be able to pass the journal entry properly. correctly, right? And next, let's come to personal account. Debit, the receiver of benefit, credit, the giver, right? Here, let us take an example. I make a credit sale for 1 lakh. I make a credit sale for 1 lakh. I'm sure you would know what is a cash sale and what is a credit sale. A cash sale is something where I realize the cash on the spot. Credit sale is where I give my customer 10 days or 15 days or 1 month of credit period and he pays me at a later date. So when I make a credit sale, what is the entry I pass? First, let's see if there is any real account involved. Anything on the asset side, there is no real account involved, there's no building. This is not an exhaustive list. Again, there can be other real accounts as well. After we do this, you'll understand what fits into real account and what fits into personal account, right? Okay, what will be the entry? Let us look at nominal account. When I make a sale, it is an income. What does nominal account rule say? Debit all expenses and losses, credit all incomes and gains. Sale is an income to me, so I credit sale. Whatever is left out, I debit. Since I'm not receiving cash or anything by way of check, I cannot debit cash. What should I debit? I'll have to debit debtors account. Debtors account is a personal account which is coming on the asset side of the balance sheet, right? So the entry will be debtors account debit 1 lakh to sales account credit 1 lakh. So I'm booking my income. I'm also increasing my asset by way of debtors. If I had received cash, I would have debited cash. Since I have not received, I record it by way of debtors, right? Apart from these three, we'll have to understand four other important things. Again, to understand this, we will need the basics of accrual system of accounting. To repeat, accrual system says whatever expenses or income, expenses incurred or incomes earned during the period have to be recorded in the respective period, irrespective of whether I have received or paid cash, right? When I look at outstanding salary, which is marked in green here, there is an outstanding salary of 40,000 on the liabilities side. What does this mean? This is an expense which was due by 31st March 2020, but I have not paid it. So, to which year does it relate to? It relates to financial year 1920, and hence I will have to record it as expense even though I have not paid any cash, right? If we come to the profit and loss account, salary and wages, there is an amount of 10 lakh 40,000. This 10 lakh 40,000 includes 40,000 of outstanding salary. What does this mean? Though I have not paid this by way of cash or bank to the employees, I will have to debit it to my profit and loss account because it is an expense which relates to financial year 1920. Just because I have not paid it, I cannot defer it to the next year. I will have to expense it to the profit and loss account and show it as outstanding salary on the liabilities side. Similarly, the, the cell marked in yellow is an income due, but it is not received. Let us say I was supposed to receive an income of 45,000 on 25th of March 25th of March 2020. So this income is relating to financial year 1920 and I have still not received it. The right to receive this 45,000 has arisen to me on 25th of March and hence it is an asset to me from that date. So does that mean I can offer this as income in the next year? No, because I have already received the I'm already entitled to receive it on 25th of March. This will be an income for 1920. The same thing will appear on the asset side also as income due but not received. Once I have received this in the next year, I will pass an entry saying bank account debit to income due but not received. Hence, my bank balance will increase. The income due but not received balance will the end balance will be zero in the next year. And the other two things which we need to know: any expense which I have paid in advance cannot be claimed as expense in that year. Let us say I pay my rent in advance for that month. I mean to say, for the month of April 2019, I'm supposed to pay my rent on 1st April 2019, and for me, 1st May, and so on. What I will do is, I might have a huge balance as on I might have a huge balance as on 25th of March 2020. Instead of paying the rent of April on 1st April, I will pay the rent on 30th March itself. So can I claim the rent expense of April 2020 in the financials of 1920? I cannot claim it because that is an expense which pertains to financial year 2021, and hence this 3,60,000 does not include the rent of April 2020. But how will I record it then? I will have to record it as rent paid in advance, debit to cash or bank account, because I would have paid it by cash or bank, my cash balance would have come down, and rent paid in advance is an asset to me because it is an expense which I have to pay in the next year, but I have paid it in advance. However, I cannot claim it as expense in the current year. The last concept here: income received in advance. If you can see the investment on the asset side, there is an investment of around 2,50,000. Again, the interest on this investment I'm supposed to receive on the last day. It is on 31st March. I'm supposed to receive it on 1st of every month. So what the payer will do is, this 2,000, which is an interest I'm supposed to receive on 1st April, he will credit to the company account on 31st March. But will I have to offer this interest income of 2000 in 1920? No, because it is not an income of 1920. I will have to defer it. I will have to defer recognition of the income to 2021. So what entry will I pass? When I receive interest on the investment, if it was received in for all other entries in 1920, I would have passed bank or cash account debit to interest income account, right? I'm debiting the real account, debit what comes in. I'm debiting bank account, credit nominal account, all incomes and gains. I'm crediting interest income ledger. But the income which I was not supposed to receive in 1920, if it is received before 31st March 2020, I cannot take it to income. What will be the entry? The entry will be cash or bank account debit to interest received in advance. Instead of interest income, I park it in a ledger called interest received in advance. Why is it a liability? Because as on 31st March, I am not entitled to receive that interest, and hence it is a liability as on 31st March. Hope we have understood this presentation. Please don't get confused or worried with so many arrows and marks. Let us understand it in the easiest way in the next slide, right? And before we move, let us understand this. What is balance sheet? Balance sheet is a position statement as on a particular date. As on 31st March 2020, the total of my assets and liabilities is 22,48,500. We write balance sheet as at 31/3/2020. However, for profit and loss account, we do not write it as at 31/3 or anything else, because profit and loss account is a result of the all transactions happened for the financial year 1920, all revenue transactions which have happened during the year 1920. Clear? Let us move to the next slide, where we will understand the golden rules of accounting in a shortcut way. But we have to remember the three golden rules. Please don't forget that. This is only to make our life simpler. Just remember this quote: increase ADLCEDIC. What does this mean? Just prefix increase before AD, prefix increase before LC and the like. So what is AD here? Assets, debit, liabilities, credit, expense, debit, incomes, credit. What does this mean? When I look at this balance sheet and say, I have a building worth 13 lakh, what does it mean? This 13 lakh is a debit balance. Everything that appears on the asset side will have a debit balance, right? I repeat, all balances which appear on the debit side, on the asset side, will have a, what will it have? It will have a debit balance. And all that appears on the liability side will have a credit balance. Everything that appears on the liability side will have a credit balance. When I say I have a creditors of 4,78,000 in my books, what is this 4,78,000? Is it a debit or a credit balance? It is a credit balance in my books, right? Similarly, when I write salary and wages for 10,40,000, what is this 10,40,000? This is a debit balance. All expenses will have debit balance and all incomes will have credit balance. Just remember this phrase, increase AD for now. Let us take an example. I purchase a machinery worth 2 lakhs, right? I purchase a machinery worth 2 lakhs. Let us look at independently. Let's not look at the cash balance of 88,500 and think it's not enough to pay it. I purchase a machinery for 2 lakhs. What will be the entry? Just forget about whatever we saw in the last slide for the time being, because this is a simpler way of understanding. Whenever there is an increase in asset, I debit, because all assets will have debit balance. Whenever there is an increase in any asset, I debit. So I debit machinery, right? What will I credit? Let us hold for the time being. Next, I am taking a bank loan, right? What am I taking? I'm taking a bank loan. What will be the entry? Bank account. Why? Because some amount is coming in. Let's say I take a bank loan for 5 lakh. Bank account 5 lakh. What will be the credit? To bank loan 5 lakh. Why did I credit it? All liabilities will have credit balance. So the more I credit, my liabilities will increase. What what happened in this entire transaction? I bought a loan from a bank. There is an increase in asset. What asset is it? The bank transferred 5 lakh to my current account. There is an increase in cash balance. And what happened on the liability side? There is an increase in bank loan amount. So coming back to this phrase, increase ADLC. Whenever there is an increase in any asset, I debit. Whenever there is an increase in any liability, I credit. Next, increase ED. Whenever there is an increase in any expense, I debit. The last part, increase IC. Whenever there is an increase in any income, I credit. I make a sale, I credit. I incur an expense, I debit. There is an increase in asset, I purchase an asset, I debit the asset account, right? What happens in other cases? It will be the exact reverse of the above. Let us take two examples. First example, I purchase a machinery worth 2 lakh by paying cash. What will be the entry? If you are going by this rule, increase AD. Whenever there is an increase in asset, I debit. What will I debit now? I debit plant and machinery account, right? What is happening on the other side? I'm getting this machinery because I paid them 2 lakhs by way of cash. Here, the asset is increasing, so I debited. What will I do if the asset is decreasing? Just reverse of the above. Asset increase, what was the increase? Machinery. Asset decrease, what is the decrease? Cash or bank balance. So I do the exact reverse of the above. All assets will have debit balance. So if there is a decrease in asset, I credit the asset account, right? Similar example, I bought the machinery by taking a bank loan for 2 lakh. What will be the entry? There is an increase in asset. Just because I took the loan, there cannot be a decrease. There is an increase in asset of 2 lakh. So I debit the asset account, which is plant and machinery. Next, if there is an increase in liability, I credit it. Bank loan is increasing, so I credit. What will be the entry? Plant and machinery account debit to bank loan account. Just if we can memorize this one phrase, we will be able to pass any journal entry for any transaction. I can challenge you. Next, let's take two more examples. I am paying legal and professional expense for 50,000. But am I paying it right now? No, I'm just accounting the advocate's invoice. I'm not paying him right now. What will be the entry? There is an increase in expense. So the phrase says ADLC ED. ED means expense debit. There is an increase in expense, so I debit the expense. What will be the entry? Legal and professional expense account, debit. 2. What else is happening here? I'm not paying him right now, I'm just booking the expense. So he will be under sundry creditors. Is there a liability which is increasing? Yes. So what will I do? I credit the liability account. Hope you are getting it. Okay, you might be wondering what can be the reverse of an expense being decreasing, right? Let's take an example. I make a purchase for 50,000 rupees for, let's say I've got it from A Limited. What entry will I pass? Purchase account debit because it is an expense, increase in expense, so I debit purchase account. 2, I'm not paying them by cash. They have given me some credit. So there's an increase in liability. I credit to a limited account. It is under sundry creditors. When I go to a limited to settle my dues of 50,000, they will give me a discount of 2,000. They will tell me, since you are a regular customer, we are giving you a discount of 2,000 in full and final settlement of 48,000. So what happened in the first place? I had debited 50,000 for purchase account and credited the liability account. So now I'm paying them only 48,000. So what entry will I pass? Creditor account is a liability account, right? A Limited was under sundry creditors. So when I'm settling it, there is a decrease in liability. So what happened in the first case? If there is an increase in asset, I debit. If there is an increase in liability, I credit. In this case, there is a decrease in liability because I'm settling. So what will I do? I will debit A Limited's account because I'll have to nullify that account. To what extent? To the full extent, 50,000 rupees. What will I credit? To what is going out? Is there a loss of asset? I mean, is there a decrease in asset? Yes. What asset is it? It is cash balance. So I credit cash to the extent of 48,000. What will be the balance? 2,000. This 2,000 is a discount received which will come under income. So if we look at the phrase again, it says if there is an increase in expense, I debit. In this case, there was a decrease in expense because what I initially thought was I was supposed to pay 50,000, but what I actually paid was 48,000. So the 2,000 was a decrease in the expense. So I will credit it. Hope this is more simpler than the initial one. If you can just remember increase AD, LC, you will be able to pass any journal entry for any transaction. You don't have to worry whether it's a real account or personal account or nominal account, but please ensure you know the basics, where real accounts fall, where all the personal accounts fall, and what happens on the expense and income side of the profit and loss account, right? Hope this is clear. And based on whatever we have understood till now, let us just solve 6 examples, 3 using the detailed explanation way and journal entry 4, 5, 6 using the shortcut method, just to ensure we have understood, right? The first transaction. In the first transaction, capital has been introduced by Mr. Anand to the extent of 2 lakh rupees. What is happening in this transaction? When I First, I'll have to look at all transactions from the company standpoint and not from the investor Anand standpoint. I'm preparing the books for the company and not to Mr. Anand. So, from the point of company, what is happening? 2 lakh rupees is coming in by way of cash. So, what will I do? Is there an increase in the asset? Okay, I'm sorry. Let us solve it using the detailed method which we discussed. What account? What is happening? Cash is coming in. What account is cash? Cash is a real account. What does real account rule say? Debit what comes in. So I debit cash to the extent of rupees 2 lakh, right? Hope there's no confusion here. What will I credit? I credit Anand's capital account. What is Anand's capital account? Anand's capital is a personal account, right? Anand has given a benefit. What does personal account rule say? Debit the receiver of benefit, credit the giver of benefit. He has foregone his cash of 2 lakh to get a stake in the company, to get a ownership in the company, right? So I debit cash because it is a real account and real account rule says debit what comes in. I debited 2 lakh and I'm crediting Anand's account because he has foregone a benefit of 2 lakh to acquire a stake in the company. So Anand's capital account will appear under liability side of the balance sheet and all liabilities will have credit balance and all liabilities are personal accounts. Also, why should there be an increase in liability? Because this cash of 2 lakhs is not generated by the operations of the company. It is a cash which is received to start the operations of the company and hence this does not rightly belong to the company. Though a cash is received for 2 lakh which can be spent to meet the day-to-day activities of the company, it has to be paid back to Mr. Anand at some point in time and it is a liability and hence we credit Anand's capital account, right? Second one, salary paid to Mr. Vinod, rupees 45,000 through bank. What is happening here? I'm incurring an expense and I'm paying it directly from the bank. So what rule does come here? Whenever the moment I say expense, nominal account rule should come to your mind. What does nominal account rule say? Debit all expenses and losses, credit all incomes and gains. Since salary is an expense, I am debiting salary. And the next, what else is happening here? Am I losing an asset? Is any asset balance coming down? Is anything happening to a real account? Yes, bank is a real account. Real account rule says credit what goes out. Since a balance of 45,000 will be reduced from my bank account the moment I pay his salary, it is credited. Salary is an expense I debit as per nominal rule. Bank is a real account I credit because bank is going out. I mean the bank balance is going out, right? Next entry. Goods sold to Mr. Varun on credit rupees 80,000. What is happening here? Whenever I say sold, it is an income. That should come to your mind. Whenever I say income, nominal account credit says credit all incomes and gains. So the moment it's an income, just write credit to sales 80,000. And what will you debit? Since you have sold it on credit to Mr. Varun, you cannot write cash or bank because nothing is coming in. You will have to write sundry creditors account. It's a personal account. This will be under asset side. It is a personal account. Hope you are getting it. The next 3 entries let us solve using the shortcut method. Let us see how much time it takes. Settle Mr. Ajay, sundry creditors rupees 55,000. Sundry creditors is a liability balance. I am settling a liability, which means there is a decrease in a liability balance. Whenever there is a decrease, what was the rule? Increase AD, LC, ED, IC. If there is an increase in asset, I debit, increase in liability, I credit, increase in expense, I debit, increase in income, I credit. Here, what is happening? There is a decrease in liability. So I do the reverse. I debit. I debit Warren's account, right? And there is a if there is an increase in asset, I debit. Here, the cash balance is going up, so I credit. There is a decrease in asset, I'm crediting. Entry finished. Next one. I'm purchasing a machinery worth 80,000 by paying 20,000 by cash and 80,000 by bank. What is happening here? Am I getting an asset? Is there an increase in asset? Yes. If there is an increase in asset, I debit. What will I debit? There is an increase in machinery account balance. To what extent? Rupees 1 lakh. And whether there is a decrease in any asset? Yes. I am paying them 80,000 by bank and 80,000 by cash. Entry is finished. Just see, it took merely half the time which it took when we discussed using the detailed method, right? There is an increase in asset, I debit. There is a decrease in asset, I credit. Straightforward, entry over. Next, the final entry for the session. Salary payable for March 2020 is 80,000, but it is not paid as on 31/3/2020. What do we do? If we have understood accrual method of accounting, I have to account it as expense irrespective of whether I have paid him by 31st March 2020 or not. So what entry will I pass? If I had paid it by bank, the entry would have been salary account debit because it is nominal account. I am debiting an expense. Credit bank or cash because it is a real account. The balance is coming down. Bank, whatever goes out is credit in real account, right? Here, nothing is going out of the bank, but I have to book my expense. So I book my expense by passing this entry salary account debit 80,000. But what will I credit? I credit salary payable or outstanding salary account 80,000. The amount might be the amount is obviously different because we are discussing all these independently. But if you look at this outstanding salary, this was the same thing which was appearing on the liability side. So even though I have not paid it, I have to charge it as expense and park this payable amount under liabilities, right? Salary is a debit according to our shortcut rule. If there is an increase in expense, I debited. What is happening here? If there is an increase in liability, I credit. I have to pay this, so there is an increase in liability, I credited it. Hope all of us have understood the golden rules of accounting. And if we can just remember this one phrase and the reversal of this, we will be able to pass any journal entry. If there is any problem or if there is any clarity required on any of the journal entries which we discussed or any examples or concepts which we discussed in this session, please comment in the comment box. And if there is any feedback by which the presentation or anything can improve, please be very honest and give a feedback so that we can improve. The basics is extremely important because in the practical world, what gives us an edge is a good what gives us an edge is a good grip of the basics of accounting. Whenever someone says accrual, you should know what accrual is. Whenever someone says matching concept, you should know what exactly matching concept is. Right? In the next session, let us discuss about joint stock companies, issue of shares and debentures, and I'm sure it will be a cakewalk if we have understood whatever we discussed in both these slides today. Because I've seen a lot of students skipping journal entry part, which even I as a student felt was difficult, but definitely not. It is the most simplest thing, and I suggest everyone to attempt all journal entry questions in your exams. Cool. That is what I wanted to discuss in this session. Thank you all for your patience. Have a good day. Stay safe. Bye-bye.